At 3:47 on Friday afternoon, Marcus pressed his card against the glass door of Halcyon Bank. Nothing happened. He tried again. The small green light blinked once, then turned red. Behind the glass, the branch looked exactly as it had that morning. The marble floor was polished. The brass clock above the reception desk was still ticking. A television on the wall displayed a silent advertisement about trust. But the chairs were empty. The counters were dark. And taped to the inside of the door was a single sheet of white paper. Temporary closure. Marcus read the 2 words 3 times. Behind him, more people were arriving. A woman in hospital scrubs held her phone in one hand and a bank card in the other. A man in a gray suit kept refreshing the same screen. An older couple stood close together, whispering as if speaking too loudly might make the notice real. Marcus opened the banking app. His balance was still there. $284,612. The money had not disappeared. It had simply stopped belonging to the present. For days earlier, Halcyon Bank had looked safer than almost anything Marcus owned. Its headquarters occupied a stone building in the center of the city. Thick columns guarded the entrance. The bank had survived recessions, crashes, and generations of nervous customers. Its advertisements never mentioned excitement. They showed families, keys, handshakes, and words like permanent. Marcus liked that. His business was finally doing well, but he did not feel wealthy. He felt responsible. 12 employees depended on payroll arriving every second Friday. Suppliers expected payment. Clients paid late. Taxes arrived on time. The balance in his business account looked large, but most of it already had a destination. Marcus did not want his bank to be innovative. He wanted it to be boring. Halcyon appeared to understand that. Its app was clean. Its branches were quiet. Its employees wore dark blue suits and remembered his name. Every few months, a relationship manager called to offer him a better account or a higher rate. Marcus usually declined. Then, 6 months before the closure, Halcyon offered him a business reserve account paying considerably more interest than his ordinary account. The representative explained that Marcus's money would remain accessible. No complicated investment. No obvious market risk. Just a better return for keeping more of his cash with the bank. Marcus asked the question he believed mattered. Is it safe? The representative smiled. Halcyon has been here for 93 years. It sounded like an answer. It was not. Marcus moved almost all the company's reserves into the new account. For months, nothing happened. The interest appeared. Payroll cleared. The app worked. The bank sent him reports filled with charts, ratios, awards, and photographs of executives shaking hands at charity events. Safety became something Marcus stopped examining because it had never punished him. Then Monday arrived. At 9:18 in the morning, one of Marcus's suppliers called. A payment from Halcyon had not arrived. Marcus checked the account. The transfer showed as processing. He called the bank and was told a software update had slowed some business payments. How long? Marcus asked. Most transfers should clear shortly. The person sounded calm. Marcus became calm because the person sounded calm. By lunchtime, the payment had arrived. The problem seemed finished. That afternoon, Marcus saw an article about Halcyon's share price falling. The headline mentioned concerns about losses inside part of the bank's investment portfolio. Marcus did not read the full article. Banks were always holding something complicated. Markets moved. Analysts worried for a living. He closed the page and returned to work. On Tuesday morning, Halcyon's chief executive appeared on television. Marcus watched part of the interview while answering emails. The executive wore a dark suit and spoke in the measured rhythm of someone accustomed to being believed. Halcyon, he said, remained well capitalized. Customer deposits were stable. The bank possessed strong liquidity and a diversified balance sheet. Marcus did not fully understand every phrase. But he understood the performance. Nothing to worry about. That afternoon, Marcus's friend Daniel called. Daniel ran a technology company and kept more money at Halcyon than Marcus did. "Have you moved anything?" Daniel asked. "Moved what?" "Your cash." Marcus laughed. "Because the stock dropped?" "Because 3 investors I know pulled their operating accounts this morning." Marcus turned away from his office door. "Why?" "They're nervous." "That's not a reason." "It becomes a reason when enough people are nervous." Daniel had already transferred most of his company's money to another bank. Marcus thought it sounded dramatic. Moving hundreds of thousands of dollars because of rumors could create its own problems. Transfers could be delayed. Automatic payments might fail. Payroll information would need to be changed. Marcus told himself he was being rational. But part of him was defending something else. He did not want to admit that he had placed nearly everything in one institution because a polished representative had used the word safe. On Wednesday, the signs became harder to ignore. Halcyon announced it was selling a large group of assets at a loss. The bank said the sale would strengthen its finances. Investors heard something different. They heard that Halcyon needed cash. The share price fell again. Online, people began posting screenshots of transfer delays. Some were real. Some were old. Some were impossible to verify. Rumor and fact began moving together so quickly that separating them became less important than reacting to them. Confidence does not leave a bank politely. It runs. Marcus logged into his account and initiated a transfer of $150,000 to a second institution. The app requested additional verification. He entered the code. A message appeared. Transfer pending review. Marcus called his relationship manager. No answer. He emailed. No reply. At 4:32, the manager finally called back. "There is unusually high activity today," she said. "Larger transfers are taking longer to process." "Is the bank in trouble?" A pause. Not a long pause. Long enough. "The bank continues to operate normally." Marcus looked at the pending transfer on his screen. "This does not feel normal." "I understand your concern." "Concern. Not wrong. Not unnecessary. Concern." The language had changed. On Thursday morning, Marcus arrived at a Halcyon branch before it opened. There were already 23 people outside. Nobody called it a bank run. They called it being cautious. They called it moving funds temporarily. They called it protecting payroll. Each person believed they were making an individual decision. Together, they were becoming an event. When the doors opened, the line moved slowly. A bank employee announced that large cash withdrawals required advance notice. Customers could still submit electronic transfers, but processing times had increased. A man near the front began shouting. The staff asked him to lower his voice. Marcus did not shout. He sat with an advisor and requested that his transfer be expedited. The advisor knew less than the people outside. Or perhaps she knew more and was not permitted to say it. She showed Marcus the status on her screen. Pending. Will it clear today? It should. Should. We expect it to. Marcus stared at her. For years, Halcyon had sold certainty. Now it could only offer grammar. At 6:11 that evening, the transfer had not moved. Marcus barely slept. At 7:03 on Friday morning, an email from Halcyon's chief executive arrived. The subject line read, "Your money remains secure." Marcus opened it immediately. The message thanked customers for their trust. It repeated that the bank maintained a strong financial position. It asked clients not to be influenced by speculation. For a few minutes, Marcus felt relieved. Then Daniel called. "My transfer cleared last night," Daniel said. "Did yours?" "No." There was silence. "Move whatever you can." Marcus tried sending smaller transfers. 10,000. 5,000. 1,000. Each one returned the same message. Pending review. At 10:40, Marcus's payroll company contacted him. The scheduled debit for employee wages had been flagged because of unusual processing delays at Halcyon. Payroll was due that afternoon. Marcus called every number the bank had given him. The branch. The business support line. His relationship manager. A regional office. He heard recorded messages, hold music, and apologies. At noon, employees began asking whether payment would arrive. Marcus told them there might be a delay. He tried to sound calm. They became calm because he sounded calm. The pattern was now repeating through him. At 1:26, a message spread online claiming regulators were preparing to take control of Halcyon. No official source confirmed it. But confirmation had become slower than fear. Marcus drove to the branch. Traffic seemed deliberately heavy. Every red light felt personal. He watched the time on the dashboard and imagined 12 employees opening their banking apps. At 2:58, he reached the street. The pavement outside Halcyon was crowded. Security guards stood at the entrance. Customers held phones above their heads, recording. A woman was crying. A business owner Marcus recognized from a local event was arguing with an employee through the glass. Marcus joined the crowd. At 3:12, the branch manager stepped outside. She said Halcyon was experiencing a temporary systems issue. Someone asked whether the bank had enough money. She repeated the sentence. Temporary systems issue. Someone asked whether transfers would clear. She repeated the sentence. Temporary systems issue. At 3:31, the security guards moved everyone away from the entrance. At 3:45, the doors locked. At 3:47, Marcus pressed his card against the glass. The light turned red. By Friday evening, the announcement was official. Halcyon Bank had been placed under regulatory control. The institution that had survived 93 years had not survived 93 hours of fear. Marcus sat at his kitchen table with his laptop open. His account still showed $284,612. Below the number was a new message. Service temporarily unavailable. Marcus had once believed the balance was the money. Now he understood that the balance was a promise that the money could move when he needed it. And a promise is valuable until the exact moment everyone asks for it to be fulfilled. The bank had not kept every customer's deposit sitting untouched in a vault. Banks accept deposits and use much of that money to fund loans and purchase other assets. Many of those assets may be valuable, but they cannot always be converted into cash immediately without taking a loss. Halcyon's problem had not begun on Friday. Friday was simply when the hidden problem became public. The bank had accepted money that customers could request at any moment and placed much of it into assets that required time. As long as customers trusted the bank, time was available. When trust vanished, time vanished with it. Marcus spent the weekend making calls. His payroll provider agreed to delay processing. He used money held at a second bank to send partial payments manually. It was not enough to cover everything, but it was enough to prove that he was not disappearing. He called each employee himself. Some were understanding. Some were frightened. One had rent due. Another needed money for medication. Marcus realized that financial systems fail in numbers, but people experience the failure in hours. On Saturday, officials announced that eligible insured deposits would remain protected under the applicable rules. Funds beyond the protection limit would depend on how the bank was resolved. Marcus had heard of deposit protection before. He had treated it like a slogan. Now he read every line. Protection had conditions. Limits. Account categories. Timing. The word safe had contained smaller words he had never examined. On Sunday night, another institution agreed to purchase much of Halcyon. Access would begin returning on Monday, though some business accounts could face delays. Marcus should have felt rescued. Instead, he felt changed. The bank had looked strongest on the day before everyone discovered how fragile it was. Its stone columns had not mattered. Its history had not mattered. The confident executive on television had not mattered. Even the number in Marcus's app had not mattered when he could not use it to pay the people standing behind it. On Monday morning, most of Marcus's funds became accessible. Payroll went out late. No employee left. The business survived. But Marcus never again used appearance as a substitute for understanding. He spread the company's operating cash across more than one institution. He learned which balances were protected and which were not. He kept a separate reserve that could cover urgent obligations if one payment system failed. And he stopped chasing a slightly higher return with money that existed to keep the company alive. He did not become paranoid. He became harder to reassure with architecture. Months later, Marcus walked past the old Halcyon branch. The name had been removed from the stone. A new bank's logo covered the outline where the old letters had been. People moved through the same doors. The brass clock still hung above the reception desk. The floor was still polished. An advertisement on the wall used a familiar word. Trust. Marcus stopped outside for a moment. The bank had looked safe until Friday afternoon. But Friday had not changed what the bank was. Friday had only changed what everyone could see. Because financial danger rarely announces itself with broken windows and alarms. Sometimes it arrives through a calm email. Sometimes it hides behind a higher interest rate. Sometimes it wears a dark suit and says the system is strong. And sometimes the most important question is not whether your money is visible on a screen. It is whether it will still move when everyone reaches for it at once.